high in natural gas in 2022. What's going on in that situation? Should Pelosi's visit have investors on edge? We'll talk. Will the U.S. crackdown on NAND chips? We'll take a look at that. Will Alibaba get delisted? Are the Boeing planes back? The 787 Dreamliners? We'll take a look at that. China's PMI falling to 49. We'll take a look at that. And the last thing I wanted to touch was discretionary spending. Back to school season. How does retail look there? And of course, we just might have Tim Quast back, guys. I hope you guys want to smash the like for that. If you guys are excited to get back to some market structure edge, give me a thumbs up and welcome to Pre-Market Prep. Let's dive on in.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, traders and investors, let's go ahead. Let's start diving on in. Bring on Dennis Dick and Joel Elconin. How we doing, guys? Let's take a look at the action in the weekend and, of course, overnight. How did you guys do, and how did the markets do?
A little bit in the red, a little bit of a decline, but the buy the dippers came in there. Just trading a little bit in the red. Focus for today will be that Friday/weekly high, 41.44, and right above that is your June 9th high. So there's your line in the sand on the upside. On the downside, don't really have anything for you yet. Pre-market low, 41.11. Crude just decided to shut $1 just a little bit ago, down 334 at 95.28. Gold continues to move towards 1800, up 760 at 1789.40. Silver right in the middle of the 20 handle, up 24 cents at 20.44. Bitcoin futures, they're down $685, nothing major at 23,305. And Ethereum is following that same path, down $56.50 at 1672. Well, can August be like July?
No. I'm going to flat out say no. But let's get the stats from July and enjoy a little bit of, hope before we just kill all the hope in about 5 minutes.
Yeah, let's bring some of that hopium in here.
Let's talk one of the best months we've had in a long time. So July, very, very impressive. Mitch, you got some stats for us?
Yeah, definitely. All major indexes gained, posting winning weeks and capping off the best month of the year. Dow gained 6.7% in July, while the S&P gained 9.1%. The NASDAQ composite rose 12.4%. Of course, this was coming as you saw those tech stocks beaten up, definitely bouncing back with those earnings. And for each index, July's performance was the best since 2020.
It was an impressive month. And the shorts got squeezed really hard. The people who were worried about everything, this market climbed the wall of worry like never before. Lots of worries. All still, they didn't really solve anything. Nothing got solved. Inflation, CPI data ticked 9.1% in the month. I mean, obviously from the previous month. I mean, you're just looking through and you're thinking, oh, yeah, are we out of the woods? But when you really stop and think about it, no problems got solved. It simply was stocks were just massively oversold, and you had obviously a squeezed people who were all positioned on the other side. So the crowded trade was everybody was bearish. Sentiment was in the gutter, and they turned them around. And that's, the reason that I got bullish, a few weeks ago, even saying that the ARKK 2022 low could potentially be in. But we've run a long ways here now. So now you got to start analyzing. We start talking about a 50% retracement of the overall move, Joel. And if you bring up SPY, you don't see that in ARKK because you're not even close to that. But you might be getting close to it on the SPY. We've done this exercise already. Call it 4,200 for fun. I mean, we're a little bit, or 4,220, for fun. So you're not too far away from there. I think there could be room to there, but it's gonna be not easy sledding here anymore. Like you've squeezed, now you've suckered some people in on the long side here, and we're gonna get into the China situation talk in a minute here, but this opens a whole new can of worms. So opening new cans of worms in August is not what the market's gonna be looking for. So anyways, I've been bullish here for a little bit here now. I think the time to be full on bullish is behind us now. There's people on CNBC saying, yeah, now they get bullish because they're all late to the party. The turn could happen. Not saying it's going to happen, but I think the China situation is going to cause the turn.
Well, he had good earnings from big tech, right?
Not even, Joel. You had okay
good earnings reactions.
The response,
good earnings reactions.
The response was excellent.
They weren't. So not. I heard this comment. Not better than expected, but better than feared.
There you go. Yeah, that's exactly what it was.
That was last week given to us.
Who said that? Somebody said that on our show, didn't they?
That was Mish Schneider last week, guys. Come on. That's what I came through, and I love that.
Mish bringing it, man.
That was the quote. Better than feared.
Mm-hmm. And that's what it was. It was better than feared.
The question I ask, was this more of the shorts getting their squeeze put on, especially on Friday? It felt like that. It felt like, they were just like, you know what, this is enough pain. I'm getting out.
I think so. And I'm always early. So take this with a grain of salt. You may have a really killer week or something because I'm always early. But I'm usually pretty good at feeling it. I'm just usually a few days early. So I might be a few days early here yet. And I haven't went full bullish. I'm still sitting market neutral here right now. I'm still sitting 35% cash, when I was up to 55. But I'm just looking here. I'm looking at stocks that I've bought and the runs that they've had. I mean, there's been some impressive moves. Like I said, I bought Square a week and a half ago. It's 762, 76. I'm 20% in like a week and a half. There's a lot of stocks that are like that. We're sitting on. You got swing trades on? These are pretty good moves. I mean, even AMD. I mean, it's been a hell of a move for AMD off the lows. $71 up to $95 here now. Joel, it's not going to get easier here. I think AMD's got room to 100. And I own AMD. But it's not going to get like, let's just go to 120, 130, 150 all-time highs. This is not the environment. Like we can lay out three things right now. You got one, inflation is still here. And it doesn't appear to be slowing that much. I might get it down to downtick, but it's not just going away tomorrow. You've got higher interest rates are here for the foreseeable future. So that's serious competition for stocks. You've still got supply chain problems. I mean, all over the place. So on my house, which I'm supposed to move into in 2 weeks, been building it forever. Still waiting on countertops. They're coming. But my front door, which was supposed to be literally 2 months ago, is now delayed another month. I've got a range that I bought a year ago, still not in. A year. 1 year waiting, still not in. My dad bought a John Deere riding lawnmower 3 months ago. Basically, I guess the season's just cooked for it because it's still not in the John Deere riding lawnmower because of chip shortage. So, I mean, here we are, we're in August, and I'm going to need a lawnmower in another month. So, I mean, and it's still not in. So, I mean, there's supply chain issues. And then we can go into the China situation, which it will only get worse if this political situation with China gets worse.
All right, let's get a little bit into that. And so a lot of investors are going to be a little bit on edge, but I'll ask Dennis and Joel what they think. Should Pelosi's visit to Taiwan have investors on edge?
Absolutely. This is the can of worms that is about to be opened. We have been in a market in 2022 where it's been very predictable. The next thing, even to the COVID, we knew COVID was coming. We talked on the show. We were 2 months ahead of it. But you knew it was coming. It wasn't going to go away. And obviously it came, and it was a month and a half later. But I mean, this has been the situation where the interest rates, we knew they were going to raise interest rates, but they still kept buying stocks right till, the very last moment here. So this could be the same situation, but this is the can of worms that is about to be opened. If she visits Taiwan, it's going to piss China off. China controls a lot of our stuff that we get. Go to Walmart. It's all made in China. Go to these other stores, all made in China. Do you imagine if they're like, we're just going to screw up your supply chain a little bit more? How do you like them apples, North America? I mean, this is a serious situation. I think we have to tread very carefully here.
Yeah.
What do you think? Do you think she's going, Mitch? Do you think she's going to go to Taiwan?
I would have to say that she's going. It's been talked about. And one of the things that I think Pelosi doesn't shy away from is being controversial, right? And giving the
Very true.
opportunity to show up in the media. She likes to be the limelight. And I think she wants to show up here and visit to Taiwan. Of course, we've heard multiple mentions that no one wants to see her there, at least in China. But we'll see what happens with this situation and how it expands from here.
I think if she visits China, I think it opens a whole can of worms. It's going to piss Xi off. I don't think there was a Reuters report, a report from somewhere they might shoot her plane down. I don't see that happening, but I do see that China could take repercussions in different ways against U.S. and obviously North America.
Who knows? What if we hear about, remember Biden was supposed to meet, right? What if we hear about a canceled meeting now because of this? There's a lot that comes off of this. We don't know which way it's going to go. But one thing's for certain, investors are going to be on edge today with that visit to Taiwan. And we'll see how it affects the markets.
It's the elephant in the room, and it's a serious situation, and it's got me scared enough to say, hey, we've had a damn good run in the markets, and people like, it's crazy how wrong they are on CNBC all the time. They're like, oh yeah, this is now it's safe to buy stocks. What are you talking about? We just had the best month there was one of the top 20 months ever on the S&P. It ran up 9.1%. You're going to buy stocks now? Where were you a month ago? When we were talking on this show 3 weeks ago when they were massively oversold. As much as they're massively oversold, we're almost overbought. Sure, there's certain stocks that haven't participated. There's always something you can find to buy. But we've had a serious run in the overall market, and I'm a net seller of stocks here now because it's just been a good move. It's been a good run. It's been good participation here. I mean, I just can't see it being easy sledding here, because if you're buying stocks now, you're basically coming in and saying we're hitting all-time highs because you just got back almost half the losses. So it moves like this. They move like waves. They don't typically V-bottom. If you're buying stocks today, you're calling for a V-bottom in an interest rate environment where interest rates rose significantly, political uncertainty all over the place, and an earnings that we're okay, and a potential recession, which we kind of already are in a recession. So maybe it's going to V-bottom. Maybe I'm going to be wrong, but I think the odds are that it's not going to V-bottom. Not necessarily that we're going to revisit the lows, but we can definitely have, some selling, to come in here again. Don't kid yourself.
Okay.
And maybe that's the opportunity to buy some stocks. But at this point in time, I want to see how this China situation shakes out.
Definitely. And now, one thing that I do want to state here with also China, what's going on, I did see mentions of the U.S. potentially cracking down on NAND chips. Of course, this would affect also South Korean memory chip juggernauts like Samsung. But the U.S. is considering limiting shipments of American chip-making equipment to memory chip makers in China. The crackdown, if approved, would involve barring the shipments of U.S. chip-making equipment to factories in China that manufactured advanced NAND chips. The first U.S. bid through export controls to target Chinese production of memory chips without specialized military applications. Of course, this would have a big effect on some of the U.S. ones like Micron Technologies. And you can watch also Intel and Western Digital Corp. Those would be the biggest stocks probably affected.
There's so many things you can worry about here. And should we just not worry about them? At a certain point, like a month ago, everybody was worrying about everything. Now it's all good. Nobody's worrying about anything. I mean, you're sitting in the back, Joel, here. What? You've been quiet here for this conversation.
Because it's impossible to predict what's going to happen, and it a lot of different things, a lot of different scenarios. Am I rushing out to sell stocks because Pelosi may go to China? No, but I think and I'm just going to group everything together and just help everybody out. You've had a swing trade on, or you've had you deploy more of your assets. You had a really good month. You had a month end on a good note. You had the month end on a high. Not every individual stock closed on its high, but keep an eye. I mean, you have the Friday, Monday scenario. And when we were in that great bull market in 21 and coming off the low and finish, strong on Friday, open up higher on Monday, and just boom, a whole other thing. Now you had the big week at the end of the end of the month. So mark your high, in your stocks from Friday. Mark the closing high for the month. See how the market reacts. Use that as your gauge. Don't move your stop up or do something. So there's a good scenario. There's a lot on the table. A lot of things can happen. Still have some earnings coming out this week, but just look at it. If you've hit your targets on the stuff and the trades that you're in, then take your targets. But very important week, the way we ended the week, the way we ended the month, let's see if we can tack more onto it. So that, I think that's just the best way to approach it. Instead of saying, oh, I'm going to sell because if she lands, we have no way of predicting it. I know you guys are making a big deal out of it, and I think the media is making a big deal out of it. I think it's going to be just like the Walmart thing, right? Walmart warned, right? And they sold Walmart off. And you know what? Right at the end of the week, no one was talking about Walmart. Walmart came all the way back. So I think by the end of the week, we're going to be like, oh, wow, she went to China, nothing happened. And the market took out, either we'll take out Friday's high, keep going, work out to 4,200. But I just don't think there's going to be such an big turn in the market based off this. But we'll see what happens.
Completely disagree.
We will see. We'll see.
Disagree.
That's the fun part. That's the fun part of the markets, and we'll see what happens here.
If this market crashes and burns because Pelosi goes to China, then that's it. Then it's in. I'll sell every single thing that I own. Every single thing that's not
I don't
nailed
think any of
down
us are calling for a crash and burn.
We'll see what happens
I think
here.
we set up really well for the bears here. I think we set up really well. We've had a huge run. We're going to have buyer exhaustion at a certain point in time. I mean, we were talking about seller exhaustion 3 weeks ago. Just as much we have seller exhaustion. You get a 9% move up in the S&P coming up into major resistance. I mean, we just set up well just from buyer exhaustion here. Okay. I think we just set up well, and then you couple it at the same time with piss and China off. I just think it all adds up to like, I want to get a little bit more market neutral. So my own personal standpoint, here's what I've done. No swing trade longs on now. They're all gone. I'm market neutral. I'm thinking about raising up a little more cash in the long-term account. I'm at 34, I think, last time I looked. I was at 54 a month ago. Obviously, I bought some more AMD. I bought some Square. I bought Marvell. I bought a whole bunch of stuff. We talked about those buys. I think I'm ringing the register on a couple of them. I think I'm still holding stocks, not going 100% cash, not saying the bull run is over, saying it is time. If you were lucky enough to buy stocks in the last month and sitting on some pretty good gains, I think it is time to ring the register. You can sit around and wait. And Mitch and you and me all kind of have the same target, 420 SPY. We have not got there yet. We have not hit our target. But when sometimes you're seeing different, concerns and different risks come in, this is why technicals work well. But you also got to look at the overall situation. And right now, I'm like, do I want to sit around and try to extract the last 90 S&P handles when we just had a 300 S&P? Do I want to get the last 10, 20% of the move? Or do I want to make sure that, I'm not going to give it all back? So
I think you'd be thinking that way. Profits. I think you would be thinking that exact same way, whether or not this thing was going on in Pelosi. I think you would have the exact same mindset. Yeah. And now it's just, now it's just a little something extra that you're putting in your formula, right?
Yeah, you got to weigh.
I've got a catalyst to sell.
Yeah. So now, So I mean, I think that's
why I asked the question, right? That's why I asked the question, and it's not necessarily that investors should sell. But will they be on edge today because of that catalyst? And I think that's what Dennis is also relating to. Not necessarily that it means war or anything like that, but it does mean some worrying and some concern in the situation.
Another thing to worry about, a new one. And maybe we just climb the wall of worry. Nobody knows anything for certain. That's what I want to keep stressing too. We can come and we can make calls. I'm going to come on this show. We analyze this, the overall economic situation. We analyze the technicals. We analyze the political situation. We analyze all of this and come up with, an opinion. That's all it is. It's an opinion.
I got another one that we need to talk about, and it's been an interesting conversation. Should we be investing in emerging markets like the China market? Well, then you hear questions like this. Will Alibaba get delisted? Earnings are Thursday before the open, and Alibaba falling over the U.S. Security Exchange Commission, adding the firm to the list of Chinese companies that could be delisted. Of course, this is coming according to a report by Reuters. The company is set to release earnings. They did put out a note that said Alibaba would continue to monitor market developments and comply with applicable laws and regulation to strive to maintain its listing status on both the New York Stock Exchange and the Hong Kong Stock Exchange. That was a statement that was given.
We've sold off a lot in Alibaba. It's hard to just come in here and say, I got to sell it now. We just watched it fall $30 here, and most of this is because of the potential delisting. It's ugly. It's got great support down at 80. I don't know if I got the guts to buy it there, and I've been of the situation that, I had my Alibaba for 5 years, and I've been calling China to a certain, extent. It's hard to invest there as well. You can trade anything. I mean, there's been trades, and I straight up don't have any Chinese stocks. I've got a little bit of EEM, which maybe I shouldn't, but obviously you've got in the EEM, it's not pure China. You've got a lot of other countries in there as well. It's underperformed for a decade. I've owned EEM for a long time, the Canadian equivalent EEM, which is the same thing. It's underperformed. I don't think any of this situation that I'm talking about is going to help it. So I'm just staying away from anything to do with China right now. Staying away.
Another wild card. I mean, how many times have we heard this listing, delisting thing go back and forth?
I don't think they're going to delist, to be honest. I don't think it's going to happen. That's my own personal thought process here. But I don't know. And I just think there's so many other things to worry about over there. It's tough. It's tough to come in here and build the bull thesis to come in and buy Chinese stocks right now. It's tough.
Yeah, it's really tough.
It's been a tough thesis for a decade. It's been massive underperformance there.
Yeah, I mean, we try to look for stocks that were catching the bounce, and that was catching the bounce for a little while there. But then eventually just gave it all back.
Trading range quickly. Yeah, look at that.
That's what I'm worried about this market.
I think that's a perfect example. Me and Mitch are on the same page here today. Joel's still sitting here a little bit bullish, but me and Mitch are the same thing. I look at this Alibaba chart, and obviously different situation, but could your S&P chart turn around in 3 weeks and start to look like something like this? If this China situation escalates, it could. And I'm not saying it's going to, but it could. And I don't want to ride this market down. I don't want to be long all these swings, watch them all, give it back. So I think the time to book your gains is now. I think it is. I think the time to book your gains is now.
Selling into strength.
As good as day to sell. You are. Even though we're down 10 handles here this morning.
Way into strength.
But not much.
Strength.
Way into strength.
Oh,
that's what you want to do. Sell the rip. We just had the hugest rip.
I mean, you look at the range from last week. I mean, we bottomed the Walmart bottom at 39.13. You're still 200 handles over that low. I mean, you had a big week. I mean, looking at this down $14. I mean, it's nothing. It's really nothing compared. Once again, the close we did rally a little bit. We got above that closing price. I mean, and also you got a new month. I mean, there's a lot of different factors at work. But I do like the Friday, Monday setups. Just where
talk about that.
It's just when the market closes at one extreme, right? For the week, for the day, and for the week. It really sets a tone for that following day. And as I said before, back in, the old days when these market was ripping, you'd have that kind of thing. And you come up and the spoods be up another 25 or another 30 and then chop around. It hasn't been quite that kind of scenario during the COVID. We would drop 150 handles and then, you'd click, wake up in the middle of the night, we'd be down another 80. But now, now you just got you got the setups. You do have the beginning of the month. So theoretically, there's some more some more money being put to work. I'm not so much a buyer of that theory, but I mean, I just think the levels are better at the end of the week when you have the extremes. Everyone was happy on Friday. Everyone got a nice mark. Everyone now, you think about things over the weekend. Hey, we're down a little bit. You have the macro situation. Things change. We didn't have, Pelosi didn't fly over the weekend. If it was like a weekend, like if she was supposed to, land, or this thing was on, Sunday night or what, that's a whole different thing because the markets are closed. So who knows what the time schedule is on it, but we'll
Well,
find out.
it won't be Pelosi, but I'll be wondering, will Boeing catch flight? Let's take a look at Boeing. Let's transfer on over. Let's take a look. Boeing defense workers will vote on a new proposed labor agreement, averting potentially a strike that could begin today. I mean, if it's not for some reason signed. But sources did tell CNBC that the FAA has approved inspection protocol for Jetmaker to resume delivery of 787 Dreamliners. We've been seeing more and more deliveries talks and starting to point a little bit to the upside. I wonder how you guys see the chart.
Been massively oversold for a long time, still trying to break the overall downtrend, which is still there. I think if you got above 180, you'd probably be starting to break that overall downtrend. But you can take your Jeff Mackey purple crayon, take it from on that bottom right chart from that 440 high and draw it all the way down, and we're still in that downtrend. So it's still hard to build the overall bull thesis, and the thing just ran. I mean, bottom of June 113, now 166. So it's been a pretty good run here for Boeing. I'd be a seller.
Yeah, this is a tough one. I'm trying to get that trend line in there. It's probably not going to work that quickly. But I'm going to give you Dennis likes one number. I'm going to give you one number for the day and for the week.
I like
167. Because
Why?
right here. Why? Because it fills a gap from April 26th, right? And you had a bad day that day, right? You hit a high of 174.87. You closed at 167.04 that day. The gap's right there. The next day, you went down $13. So a lot of people getting their money back here. This thing just continues to rally. If this goes, gets bid today, holds 167, boom, just keep on going. But I just like that it's filling the gap. It was a close before, before the big decline, and now you're coming back up to that area. So really, right now, it's resistance, but it could be easily proved support this week. I mean, this thing is just kept on going. I mean, people have asked about this, and I look at it, it gets up to like 143, and then, oh man, 130, this thing's dead. Had another $20 rally, pulls back. So it's been incredibly strong. But let's see, making a base and support at 167, propel it up to higher levels.
All right, let's keep it going here. I want to keep going through the topics coming up soon. We should have Tim Quast joining us. Excited to get back into some of that action.
I haven't seen Tim for a while, so
it's gonna be fun.
He had enough times in the Alps, and I can't blame him. He had a good time. And
he lives the dream, man.
Yeah, he's living the dream.
Him and
that's
Joel
for sure.
Alconin.
But let's get into here.
That's because I work with you guys.
I don't know if that's the dream or the nightmare, Joel.
Well, the question is, did you guys get your crayons this weekend? Because it's starting to get towards that time.
Oh my gosh, the
spending,
kids are back to school.
Back to school season starting up. I did see mentions, though, at least for the consumer and credit card issues that are probably starting to arise. Credit card balances for people aged 25 and younger rose 30% in the second quarter year over year. TransUnion, one of the biggest three consumer credit agency, estimate credit card delinquency rates could rise to 8.4% in the first quarter of 2023.
What do we talk about? And we talk about the whole situation with higher rates. If the rates stay high, and they're going to try to bring them down, don't kid yourself, they will try to bring them down once inflation gets in check. But they got to leave these rates high. Let's say scenario analysis, rates stay elevated or even continue to go up in the next year. That credit card debt is going to go a hell of a lot higher. The toys all get sold. Like we already said this before. First thing you do when you're having money troubles, you sell all the toys. then you're jacking up and racking up the credit card debt, the personal credit, whatever you can, and then obviously now you're going to, default on your car payment, then you're going to default on your house payment. I mean, that's just kind of how it goes. Obviously cutting out all discretionary spending as well. We're only 3 months into higher rates. It's only been up. They've only been up for a little bit. People haven't been hit yet. It takes time. That's coming. So that's the problem too with the overall scenario of, let's go back to all-time highs. If rates stay elevated, they don't get inflation in check, that's the scenario where the markets are going to get ugly again too. So, I mean, you can keep looking at all that stuff, but at the end of the day, it all depends on where inflation is going. We need to get inflation in check. And if inflation starts to tick down, the market will rally just because they think the Fed's plan's working. So when do we get that next month? When do we get the CPI data? We get
It's like in 2 weeks. So I'll give you the exact date.
Mitch will go hunt that down. I mean, that's a bogey, and I do think that could be a bullish catalyst for the market there, because I do think we're going to see a tick down, and I do think the market would applaud that significantly. Mitch looking for that. Joel's
I'm getting the date.
Studying something intently. What are you studying over there, Joel? You look so.
I'm pretty sure it's the 17th. I'll get exact
17th
date for us, but
somebody said the 10th. So our chat's usually pretty good. Greg Stanford said,
it's a little bit earlier this month.
Yeah, he's saying the 10th.
Yep.
August 10th, 8:30.
Yep.
Got it.
Is it 8? Is it confirmed August 10th?
Confirmed August 10th.
Oh yeah, it's coming. So there is a bullish. So we were a little bit of bearish scenario. I think the CPI is going to be good. What do we get today? We get some data today too, Mitch?
Yes, we do get data that's important today. Released at 10 a.m., you'll get the ISM manufacturing PMI. Estimates are to be 52. Prior was 53. Keep that on watch. Of course, manufacturing PMI. Give us a little insight on how inflation is doing. And I think it's going to be a number to keep on watch. I think the numbers here on until the Fed meeting are going to be very important. We have at least from the numbers that I've seen, we have yet to see inflation really show up as a peak in the data. That's what everyone's going to keep on watch. If that doesn't change, then are they going to continue to hike rates? That's what everyone's thinking.
I mean, another big reason for the rally last week is, is Pumpin' Powell.
Pumpin' Powell, man.
He overall kind of deemed the market. The market deemed him a little bit more dovish, and maybe things are going to slow down. That was, besides the the okay earnings that they still decide to rally the market on, and we had a big day on the Fed day too. They tried to bust it, not much, but that was a big catalyst too. So what's that? The 10th, so that'd be a week from Wednesday. So long ways away from now, right, guys?
Yeah, I think a lot of it has to do with also how is inflation going to rise or lower from here into the meeting, right? And then also this month, a lot of people are watching energy prices, right? I mean, we have seen energy prices come down, but they caught a bounce last week. And so we got to continue to watch. We can take a look here at natural gas. We can take a look at some oil plays. We did get some earnings to hit on Friday. So let's take a look at some of those. First thing I want to do is let's go to some natural gas. Let's take a look. And I'll throw out the question, will we see a new all-time high in natural gas in 2022? Of course, natural gas was up roughly 66% in July, putting it on its best month since the contract.
I bet you $1 million we don't see a new all-time high.
Ooh, I'll take it. Lunch, baby.
That sounds like $1 million.
No,
it's like
$1 million. So it has to get it has to get over 24.
I'll take the lunch.
Okay,
$1 million bets are tough.
Yeah,
exciting though on the show.
It needs to go. The all-time high is 24
bucks.
Well, in 2022,
well, that's not an all-time high.
We'll do 52. We'll do 52 week. How's that? Make it in the year for the year. Will we get to a new high?
Who was buying natural gas for 24 bucks back after the financial crisis? That guy.
I'm not sure. Same people that were buying crude at 150,
and silver at 47.
Here you go. Just for Joel. Here you go. New 52-week high here. Do you think?
Okay, a new 52-week high this week?
No, not this week. In this year.
He's buying a long-term call option. Long-term call.
Yeah, I'm selling it. Selling it or
buying the long-term call. You're selling the long-term call.
I'll tell you right now, a lot of people like to see this back at $9. Ticked its head over to. I mean, it could. I mean, I'm not. I see 3 monthly tops in the same area. Geopolitical situations could always change that. So, whatever. It's not going to make an all-time
The reason
high.
I'm bringing this up too is that this is kind of a new opinion, because when it was down there around, let's say $6 or $5, you guys were more of a sell even at those levels. So now we're back up to these levels. I'm wondering if it's a pullback buy here.
I have no opinion.
Where's your out if you're buying here at this level? I mean, you just had two monthly lows in the same area and 3 monthly highs in the same area. I'd be more of a chop fest here between 6 and 850 or something like that, a long consolidation before you have your next big move.
All right. Well, we'll see what happens in natural gas. It's going to be something that I'll watch going into winter. We'll talk a little bit about oil coming on up, but I think let's go towards what everyone's been asking for, and we got them in the back. It's been some time, but it's time to go back to it. I think we need to get a little dance tunes going here. Let's go. Let's go. You know what time it is? Market Structure Mondays is back, baby. And look at that jersey. Looking a little flexing on there, Tim. I see you.
He's fit too. Look at this.
I see you.
He's been working out, Joel. He's been working out more than you.
Well, I don't know. I've been eating and drinking an awful lot too. So
that's good.
I don't know.
If you do the workouts, you deserve to do that. That's my theory.
He looks good, man.
Notice that I'm only showing from my chest up. I'm excluding my belly.
It's a smart man. Show the upper body.
Holy, I'm 217 now. I weighed myself over the weekend. I was like, man, I am in trouble here. Buy the 225 calls. But Tim, you look great.
Well, thank you. Good to see you guys. I've missed you. Apologies for being AWOL for so long. And I was going to wear my super cool Saracena Italian shirt from Bellagio on the Lake Como, but it's Swiss National Day, and since I'm an aspiring Swiss national, I'm sporting the colors. Let's see this.
I see you.
You see
it
right there.
There's the cross, baby.
Yeah. So August 1st, 1291 is when Switzerland ratified its first constitution. So they've been doing it for 731 years, as compared to 234 in the United States. If you go from the date that New Hampshire ratified the Constitution, June 21st, 1788, it took 9. So they've been doing it a lot longer than we have here in the United States, and it seems to work pretty well. I'll tell you. For the hashtag EdgeMob, in case you wonder where the hell I've been. We went to Europe July 5th and flew out of Zurich on Saturday, came back with our 500 pounds of luggage, which was like 5 times more stuff than we needed. In fact, I tweeted a photo. So you can see me standing on Renweg Street at about 6:45 a.m. Saturday, leaving Zurich and returning to the United States. But I'll tell you, we've got Edge subscribers from Switzerland who are always telling me, look, you should come and visit. So we did, and it was tremendous. We were everywhere.
It was not
bad.
Alas, no, I couldn't. There was nothing. This was all us. I'll work any angle, but I could not come up with a justifiable reason to do that. But we went, and I'll shut up on this, and we can move to the market. But we have friends in Basel, they've been there for 14 years, and she is retiring as a Roche muckety muck because Hoffmann La Roche is based in Basel, as is Novartis. It's a big pharmaceutical hub, and returning to the United States. So they've been telling us come, and then she said we're leaving in March. So we said we're on our way, and so we went to Basel, and then we road trip down to Lake Como and loitered suspiciously outside George Clooney's house on a boat. and then went down to Chianti in the Tuscany region, then went back and hiked the Alps and hung out in Zermatt below the Matterhorn, and then to Montreux and to Interlaken and Lucerne and then Zurich. We were everywhere. And it was and we rode
just a daily day in the life of Tim Quast,
Look, all you got to do is use Edge, and you could be doing this as well.
If you weren't in Switzerland, I would think you were volunteering for the Red Cross.
Right? Yeah. It would. Right. But this is a white cross, notice.
True.
There's the difference.
They got the pat on the Red Cross.
Right.
So what do you got? What's the market? The market still had structure when you were gone. Ending the month on a strong note. Let's take a look at
dive on in.
Well, there's a suspicious correlation, if we're honest here. And that is that the market was not in very good shape until I left the country. And then while I was out of the country, the SPY went up over 8%.
Go back to Switzerland.
And I returned, and now the futures are down. Right? So any time that we all need a bump in the U.S. equity market, I will volunteer to go to Switzerland to help out.
I'll tell Pump and Pal that. No worries.
Pump and Pal. So to answer your question, Money Mitch, here's my view. And look, there are all kinds of things that you can think about. And my view will always be shaped. And look, I'm a fan of monetary policy and economics, and I pay attention to all those things. But in the equity market, the most reliable gauge is supply and demand. It's always the most reliable gauge of how any market will perform. What is the supply-demand balance? And if you look at the month of July from a market structure standpoint, short volume, the supply side of the market imploded. On roughly the 5th of July, when I left, 49.4% of all trading volume in S&P 500 stocks was short or manufactured. And it dropped to 47.3%. You say, well, that's not a lot. Well, it's the exact amount the market went up. That's what the market went up. There was a decline in supply and money stayed roughly steady and the market went up. I can show you that. So let me do this for you. So for you Edge users, you already know this. And bear with me because I'm rusty. I haven't done this for a while.
Holy.
And I may screw it up.
When I come back from like 3 days off, I feel rusty. I can't imagine having 3 weeks. So how long you got? 3 weeks?
Almost 4. We were gone. Yeah.
It'd take me a week or two to get the feel back, and everything. It's amazing, but it's enjoyable when you take some time off. But
it's
hard to get that feel back.
It's good for the soul. And now I'm fired up and ready to we're about to put some more math on the Edge platform, what we call volatile tens, which I found even there. So I made more in 1 week trading than did the S&P 500, and I'm doing it on a bike. I'm using my phone, and I'm putting in a plug for Interactive Brokers, not because they asked me to, but we don't have a relationship with them, but because it's pretty easy on your phone. So I'm using our app, Edge, and then I use Interactive Brokers.
Is that who you trade through, Tim? Interactive Brokers?
It is. Uh-huh.
Yeah, I'm Interactive Brokers too.
There you go. Well, it's a good platform. So here, Mitch, is what happened. Here is about when I left. So the demand side was very high, and so was the supply side. The supply side, I don't know if you can see this very well, but it's 49.4% of all trading volume in the S&P 500 came from almost half of it. It is an all-time record, and it dropped from here all the way to here. And what did prices do during that time, particularly after options expirations? Well, prices rose. Prices moved inversely with the supply side. But notice what's happening now. So demand is all the way back up to the peak that it was when I left. And it bottomed here shallowly, and then prices took off again. Now it is where it was here, and the supply side is starting to rise. It was actually back over 48% if you looked at the daily read on Friday. So if demand is 7.5 and statistically stocks decline from those levels and supply is rising, what is the market likely to do near term? Well, just a basic grasp of supply and demand will tell you that stocks are likely to decline, at minimum to stall and likely to decline. And it will have nothing to do with the raft of earnings yet to come in the S&P 500. By the way, I'm happy to see, and I think it's a fluke more than a choice, but an awful lot of the S&P 500 companies are not reporting during options expirations. You know, we talk about how public companies should not be reporting when there are little green squares on the calendar, because that's when you're going to get gambled. Well, don't do that. Wait till after those, then report your results, and then you give your investors a better chance to see the value of your operations reflected in the performance of the stock. If you do it during options expirations, somebody's going to gamble on you, long or short. And so you should be aware of that, public companies and traders. You should be aware of that. I don't like to trade during those times because it's like walking through black holes. You never know when you're going to step in one and disappear. And it's challenging. So in just this short period of time, you could make very good returns and you don't have to have your money at risk. But when the math begins to tell us that the market now has, it's like it's like flooring the throttle in your car. That's what 7.5 is. The car can only go so much faster. You've got it pushed all the way to the floor. So what happens if you ease up? Well, clearly it's going to slow down. And supply is like a mountain slope, which we rode a bunch of on bikes. And when that begins to rise, that's also a gravitational pull. So if the foot comes off the throttle and the slope increases, prices are going to decline. So beware of that, traders. I'm currently wholly in cash. I sold my last position, which I wanted to talk about, by the way. And Dennis, you'll appreciate this in particular, on Friday. So, and Mitch, you can tell me to shut up at any point, but I think this is a very good lesson for traders. These are things you should know.
I'm more along happy that when you were gone that first Monday, I pointed out above 6.0, so we could see a little bit of topping action. At least I'm starting to learn the market structure edge. I'm learning. I'm getting there.
And you were right. So when sentiment topped, what did the market do? It went down. When sentiment or demand bottomed, right around options expiration, there was a split week expirations period in July, then stocks recovered because all of those bets, positions, wins and losses were sorted out. It's like returning to zero and off everything goes again. Well, it's very important to know that as a trader. So back to this trade. I had a position.
What you got for us?
So I had a position in Silvergate Capital. It's not my favorite kind of thing to trade, but it has a lot of volatility. So Silvergate Capital. It's actually a fairly liquid stock for a small cap stock. I don't trade a lot of small caps. But when I looked at this supply demand imbalance, so the strong demand, falling supply into the end of the month, I thought, well, I could make money on that. Plus it moves 7% between intraday high and low. So if the price is down, let's say 3.5% on a day, I'm buying that because I'm almost certain to make 3.5%. Because that's how much the price moves in these conditions. So at Friday, I had hundreds of shares of this stock. And so that's too much to execute in a single trade under most circumstances. I was going to be on a bike. Well, how am I going to trade? So I don't prefer it, but I put in a limit on open order using an order management algorithm from Interactive Brokers, saying I'm going to try to get out within the bid and the offer spread. So, and I could look at that and see, well, it's 20 cents. So I put my order about in the middle and I used an order management algorithm and I may not get filled because I'm saying I will sell at this price. Well, what if my price is never hit? I mean, you could go from 92.07 to 92.07.5 to 92.09 or whatever the price was at the time. And if I'm at 92.08, I don't get filled. And son of a gun, I didn't get filled. Right, so it's a fill or kill trade, meaning it either happens in the open or the order cancels. So I'm on my bike and I look at my app and I see I did not get filled. So I pull over and I executed manual trades of less than 100 shares, 99 shares at a time. And I looked at the spread and I said, okay, I'm going to put in a marketable limit order between the bid and the offer. Do you guys understand?
You got done, right? Yep.
Yeah. And I did boom, boom, boom. I do an order, duplicate it, do an order, duplicate it, do an order, duplicate it, do an order. And I made hundreds of dollars more than I would have if I had used that, if my order management algorithm had worked. And you'd say, well, then it was a good thing it canceled. Yes, but I was counting on that. I was counting on a tool to do something for me, and the tool failed. So when I do it knowing what I know that all trades for 100 or fewer shares that are marketable have a high chance of executing. If it's a market order, it must be executed, but I'm going to sacrifice some of the spread if I do that. Well, you should know that, traders. Those are very important things for you to understand. To me, they're basics of trading successfully. And so that's how it capped off a very good stretch for me trading EQT. You were talking about natural gas earlier, AMN, SI, and some other stocks. It was easy to make money in that period, but it's because there was excess demand and insufficient supply. Now those conditions are changing.
It's interesting with just trading in the middle, and we've talked about this in our execution tactics part when we did our educational webinar. I think you were involved in that one, Mitch. That last year we did an educational webinar on execution tactics, and I talk about that same thing where when you're in a widespread stock, if you're in Bank America, you just hit the bid and get the hell out.
Exactly.
Yeah, just get rid of it. Don't play around. But you're in something 20 cents wide. I don't want to give up the full 20 cents normally. So usually I say if you really need to get out, like you're doing, you go 2/3 down. You can save yourself that third, because if you're going, and if you're a smaller trader, and this is the big advantage. I mean, if you're selling 10,000 shares, you got to do all kinds of different things. But when you're a smaller trader, and a lot of our retail traders are, you got a few hundred shares, you can go to the 90, 90, 90. And you know what? And you just do boom, 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 and it'll take you. If you go 2/3 of the spread, so you could go down like 13 cents, and you'll probably get executed. If you go for if you had 1,000, you go for the full 1,000. What often happens is you just end up on the offer. Now the bid just drops 20 cents on you, so you're pushing the price away from you.
Yeah,
there you go. That is so valuable. What Dennis just described there can be the difference between profitable trades and unprofitable trades. Sure. Between being able to afford tools that give you information and not being able to afford them. If you're a small trader, it's just very important. Yep.
No, it's definitely important. And then we ran into a situation where someone didn't get a fill, and a lot of that was through algorithmic order execution. And so that's the important thing of knowing your order routes and how this is going out. This is why I like, IBB, but I mean, it's up to what you guys want to use. But hey, if you're noticing you're struggling on your execution, a lot of that is understanding the routing. And I think this is important. You're seeing Tim understand that. Dennis uses that every day. And so traders out there, I would definitely look into how you routing your orders can help you. And in certain situations, like Tim just did there, manually jumping in and pretty much saving his own day, right?
Right. You appear to be an algorithm. And we've talked about this before. This is what firms like Citadel and Hudson River Trading and Virtu and others understand, that the rules of the market require a continuous auction market. They don't want it breaking down. So they require trades of 100 or fewer shares that are marketable, that are market orders to be executed. Well, what do those guys use? You almost never see Citadel. Citadel doesn't use limit orders. They're using tiny trades, marketable trades, because they can stick Goldman Sachs with having to take the other side in a dark pool then. And so that's what they do. And so now you know what 98 or 99% of traders don't understand, and it makes you better.
Definitely. Now, the last thing I'll have for you, and I'll have a little fun with this one. I'm going to have you, the markets were rocking, last week. And so I'll have you use an Ozzy Osbourne song to describe this market. What we're going to use here? We're flying high again, shot in the dark. What is this here?
Well, so yesterday I was picking up one of our cars that friends of ours looked after. We needed to free up a spot in the garage for all these people who came to babysit our dog while we were gone. So there was he thought he was on vacation. Mom and dad came back and the fun's over because he's had nothing but fun. But I'm coming, and so I'm listening. It's not my custom, but I'm used to listening to Ozzy's Boneyard on Sirius XM, which a little of that, but then you need medical attention because it's so discordant. I don't know if I have a song, but that's how the market felt. It felt like Ozzy's Boneyard on Sirius XM last week. It just, shred pounding metal. And now ahead, I think it might be time for yacht rock instead, because where you sit back and just be a little bit more cautious.
I'll go on. I'll give you a song. I'll say that it's the Diary of a Madman. That's this market for you.
Hashtag Diary of a Madman.
Take the money and run.
I like that.
Take the money and run.
Absolutely. Well, I can do this for you, Mitch. It's not a song, but I can tell you a couple of things that I would look at from a trading perspective. And I mentioned this volatile tens, and I'll finish with this. But if you're going to trade when supply and demand are starting to converge instead of diverge, you have to beware what things will still retain some capacity to rise. And it's not everything. You can't just continue to do what you were doing because things are not the same anymore. And so I look at volatile tens, and it's a sort that's going to look for things that have demand at 10 and supply that is declining or diverging. And it's not perfect math, but I could look at if you could look at Enphase. Here's an example of a company. And look at this volatility, 6.9%. So if Enphase is down 3%, the likelihood that you produce a return with this kind of supply-demand divergence at 10, supply way below trend, it's leveled off, but the likelihood that you produce a 3% return in like a day is very high. And as I've said before, I vastly prefer, I don't gamble. I don't like things that are too good to be true. I'm not looking for, you could read Andy Kessler's column in the Wall Street Journal today, which is very insightful about huge returns. Some of these crypto lending facilities paying 17% interest. Well, that's a clanging klaxon telling you that there's risk. I'm very happy with 3% with high probabilities of return. That's what I'm after. Yeah, and this definitely and you repeat that over and over, and you're a prudent investor who produces reliable returns with limited risk. That's how you become successful, not by taking crazy chances.
That's exactly it. And that's what people don't understand. What will make you successful as a trader is not how much you're making, it's how much you're losing. Cutting the losers.
100%. Well, thank you for coming on. Like always, Tim.
Good to be with you guys.
I've missed Market Structure Mondays. Happy to have you back, Tim.
And happy Swiss National Day.
Happy Swiss National Day.
Very nice.
All right, guys, we're going to start getting ready to wrap on up. We just got about 2 minutes. So
Dennis, what did you do, man? Did you I
guess they listen to the bots are listening to the pre-market show.
I know.
Let's drop 12 handles because I went on a bearish rant. It was me, guys. I'm sorry. I was me.
Dennis. Come on,
Anyways, I think the markets, I think we gotta be selling into the strength here now. And
what it might be,
they're going to come in. They're not going to go straight down. They're going to come in like, oh, this is my big chance to buy because we're going back to all-time highs. So you'll probably see a lift after the open because that's how stupid this market is. They'll come in, they'll buy them again, and maybe they'll buy them the next day. But eventually, the buyers will exhaust here. I think we've just come too far, too fast. And I know you're sitting down, you're looking at your over portfolio and saying, what a crappy 2022 year. And you're hoping to get all your money back. Sometimes it's just good to get part of it back. And sometimes it's like, okay, I can cut the loser now. It's reasonable. I think if you've been sitting on bag holding some of these stocks here, it's time to cut some of those losers. I think that we've had a really good run. It's been a really good month. I think, you're going to see probably, some more buy the dipping happen. We're not going to go straight back down because some shorts have got squeezed here. Path of least resistance short term could still be higher, but I think it's prudent to take chips off the table. Tim's 100% cash. We're all kind of on the same side. It's a little bit concerning, except Joel's still trying to sit here a little bit on the bullish side. He's not a believer in the bear thesis, although he's starting to become a bear because of the 12-point sell-off we just had.
I'm basing it on Friday's action, Dennis. And, we're early in the session on Monday. Can we get green? Can we close above 41.33.50? Can we take out last week's high? I mean, the Friday momentum. What I think that, people are looking for for keys today, and like one thing that really juiced the market on Friday was Apple and Amazon, right?
Oh
So
yeah.
I would keep an eye on those two, because it's one thing, oh, rah, the earnings reports, what Tim Cook said, but now you have the digestion period. Are you willing to step up and buy Apple here? Right? Or wow, you just saw this thing at 130
I
and got
hedged my
almost
Apple. I was
I
wrong.
know.
I
You're
hedged it
not
into the
wrong,
print.
Dennis. You're not
Wrong.
wrong until you did it for a year. I mean, you went
I
farther
hedged
out.
out. Yeah. And I can
Yeah.
lift the hedge, but I'm down $7 in the hedge.
Yeah.
So, maybe I shouldn't have, but I felt like I was nervous going to the print. I still think that there could be some profit taking eventually happen here, but so far so good. It's holding up well. There's been big moves. I mean, you could come and buy
Huge.
Amazon now. You're buying Amazon now? We just rallied 30% on one of the biggest companies in the world
Same way
in
I feel.
less than a month. And you're buying it now?
Yeah.
Holy backwards, man. Backwards.
Well, what should we talk about, guys? It's 9 a.m. And don't forget, guys, we will be having a special with the pre-market prep plus. You guys are seeing the discount there on your screen for what? For the swing trading event. Don't miss it, guys. $99. That's all you need to go ahead and check out. Joel Elconin, Dennis Dick, Rob Friesen, and of course, hosted by Spencer Israel.
Quick Spencer story. So I was joking with them, and I said, hey, if you need any help moving, just let me know. I'll send Lisa over, right? So I get a phone call yesterday afternoon. Can you help me move a couch? It should take about 15 minutes.
The story of my life.
About 45 minutes later, and a whole big layer of sweat, man. We got
Nice.
that couch out. But anyways, I'm gonna go cover some symbols over there. Triple D. I'll check in with you later on. Go get
Money Mitch, fantastic job once again. I tell you, we go from Spencer Israel, who's awesome, and Money Mitch is filling those shoes very well. You're doing a great job, buddy. Keep it going.
Yeah, we've been doing great. I appreciate you like always, Dennis. Have a great trading day and keep working towards what you do best.
Thank you, Mitch.
All right, let's go ahead. We're going to wrap on up here. Like always, guys, check out premarketprep.com if you guys want to input this and get your discount for PMP 10. So don't miss that. I want to get you guys that discount. Keep battling, guys. I hope you guys had a great show today. Enjoyed it. We talked a lot about what was going on. The short squeeze got put on. How long does it last? Will we see a new all-time high in natural gas, or at least 52-week high for me? Will Pelosi's visit to Taiwan have us on edge? Will the U.S. crack down on NAND chips? Will Alibaba get delisted? And what will happen in the back-to-school season? We talked a little bit about this. Guys, if you missed any of these questions, roll on back, catch them. Up next, you guys got live trading with none other than Lord Ryan, Zunaid, and I. As we look to continue going, July was the best month for me, at least in my trading. So come on over, guys. We'll talk a little bit about some trading action. And I got a surprise news for you guys. Looks like Mitch just might have done something for himself. But come on over. I'll let you guys know on live trading. I'll see you guys on over there. A little disclaimer action, and bada bing, bada boom.